guys, it's time for our 20 stock weekly challenge again, and before I go on, I would just like to quickly introduce ourselves. I'm Joe, I'm the husband.
And I'm Sarah, I'm the wife.
Okay, obviously.
Yes.
So we are a husband and wife team, and we believe that
Together we are better.
Okay, sorry, I forgot to put that inside, but yes, you had the sneak preview. Okay, today this company that I'm going to share with you, it is in Warren Buffett's portfolio, and you know right now it is giving an 8% dividend yield.
Wow, 8% dividend yield.
Okay, so if you are very interested to find out, just stay on with us. Okay, how do you calculate dividend yield? So for this company now, it is giving an annual dividend of 3.13 per share, and the share price now is $38.57. So doing a quick division, it will tell you that the dividend yield is actually 8.12%. Okay, before I carry on, I'd just like to reiterate this thing. Okay, this is really for learning and educational purpose. It's not a stock recommendation. So please do your own diligence and do portfolio size before you take any action. This is super important. Okay, if you take a look at Guru Focus and for the latest quarter update, you will notice that Berkshire Hathaway actually had a new buy. Okay, it is none other than this Occidental Petroleum Corporation. Alright, what's very interesting is that Warren Buffett's average buy price is $47, and right now it is trading at 38.57. Okay, so if you go into the market on Monday and you buy it straight away, you know what, you beat Warren Buffett already. Okay, so you may ask, what is this Occidental Petroleum? Okay, like the name suggests, the main business is in oil and gas, and they also do some basic chemicals for manufacturing, and they are also involved in midstream and marketing. What midstream means is that they are taking care of the process in the middle stage of the oil refinery processes, so they are very involved in oil processing and transportation. All right, so a quick look at the financials will show that actually the financials for OXY, which is a ticker symbol, is actually not fantastic. It is not that poor also. My main concern is in the year 2015 and 2016. As you know, you see revenues have dropped a lot, and the earnings is actually in the negative. Even the free cash flow, they are in the negative. So a quick check actually revealed to me that the crude oil price actually dropped from more than $100 to $51.88 in 2015. So this could explain what happened to OXY in 2015 and 2016, where their revenue and their earnings suffered so much. Okay, so the next part of the financials also revealed something which I'm quite concerned about in terms of the net margin. If you look at from 2018 to TTM trailing 12 months, you will notice that there has been a great drop in the net margin from 23% to 5.6%. And of course, in 2015 and 2016, the margins were also not doing so well, possibly because of the drop in oil prices. Okay, so what happened to the net margin from last year to this year? A quick check actually told me that okay, OXY actually bought over a company called Anadarko Petroleum. So why did they try to buy over this? Okay, before I go on, I would just like to check the company's financial health after they have bought. So this is the latest quarter's financial report from OXY. So if you see those those rows highlighted in blue, you will see that even after the acquisition, OXY still has a retained earnings of 22 million. Okay, I think it's million. Okay, I can't remember the units, and they have a total positive equity of 41 million. But okay, doing a quick check will reveal that they actually have almost twice the amount of debt compared to their equity. All right, and they have almost twice the amount of debt compared to assets. So debt wise, it is not the best. It is not in the best shape, possibly because they actually took on some debt to buy over the company. So now it comes to questions: why did they bother to spend so much to buy this company? Okay, if you see the part highlighted in red, they took on a lot of debt, and if you look carefully, you will know that this Anadarko Petroleum has prime US shale fields. For those who are not sure what is shale fields, Okay. Okay, shale oil is actually a substitute for conventional crude oil. So, but extracting shale oil is more costly than extracting crude oil. So that's why people are still hanging on to crude oil, because shale oil is simply a lot more expensive to extract. But we know what is happening to the world right now. Crude oil reserves are actually dropping. The world is slowly but surely running out of crude oil. But shale oil is relatively a new discovery, and the US actually has the most shale oil deposits in the world. So this means is that actually if you talk about shale oil, if shale oil is to overtake crude oil, the United States actually has the potential to overtake the Middle East in terms of oil production. So there is a possibility that the US may become the largest oil producer in the whole world. So I think that is something precious commodity that the US want to take advantage of. Okay, so on Wikipedia we see that, okay, the total world resources of oil shale equivalent yields 6.05 trillion barrels. Okay, in comparison, the world's proven oil reserves as of 2016 is only 1.69 trillion barrels. So shale oil is like 4 times as large as all the crude oil combined in the whole world. So this is huge. Okay, so that's all for a very quick study for this week. It's a very quick study of Occidental Petroleum. I'm not going to say that I understand this company perfectly. I'm not going to say that I'm the expert. So the ball is in your court. If you decide to actually invest in Occidental Petroleum or OXY, do let us know. All right, because it is giving 8% dividend yield, and Warren Buffett just went in. So let us know in the comments whether you will invest in this or not, or you will hang on to it. All right, till next week. Bye bye.
Bye.